Hello and welcome to the Daily Exchange from Singapore. Today we are joined by Vaibhav Kadikar, CEO of CloseCross, and we're here to talk about everything prediction markets and how we can make them better and make them work. So, what is CloseCross aiming to do?
Right, so CloseCross is a collective predictions market platform. And what we aim to do is to really transform the way the entire predictions market industry works. And when I say prediction markets, it's actually a much wider net than what normally is cast. So I'm not just talking about your traditional players by now in the blockchain and crypto space, like Hog and Gnosis, for example, but I'm also talking about the entire financial derivatives market. Right? Because in essence, that is also a predictions market, right? People are predicting the value of an underlying asset in the future, and then they tend to do it for hedging or speculative purposes, but in the end, they still make money or lose money in that. And that is a prediction market for us. So at CloseCross, we are actually going after the specific financial asset part of the predictions market. And so our target is squarely on the financial derivatives disruption, as well as, of course, offering an alternative to the other old school prediction platforms which you see today, but only limited to the financial space.
So, the predictions market, to clarify, does it help you predict the future, or is it people making predictions of the future?
It's both. It's both, right? And I think, yes, it can be used interchangeably, but I think it's a collective term, right? So what happens is when individuals are making these predictions and entering the financial markets, collectively it creates a crowd wisdom. And this can actually also be used as a precursor to making the future trades once you can observe this crowd wisdom. So it's both, right? I mean, without having that collective wisdom, you can't actually define the prediction market in a different way. Yeah. So it's both. It starts with the individuals collectively when they are getting into these markets and making different predictions of asset prices going up or asset prices going down. We can observe the crowd wisdom, and then actually you can also use it for other purposes.
Do you have examples of these kinds of predictions? We've been able to look at markets in the past and say, make predictions of the future based on trader behavior.
So you can, right? I mean, in terms of, let's take a classical asset, not a crypto asset. In terms of if you're trying to predict the price of the Dow Jones Industrial Average over a month's time. Now, normally it is defined by Dow Jones Industrial Average futures, as you normally can see on other news outlets where they constantly define it. This is based on forward contracts for the individual assets within that index. But you can also see that there are people who are observing the macroeconomic environment or the geopolitical situations. Is it going to lead to a tariff war between two large players globally? And how would the index react as a whole, right? And so you might end up in a situation where people are actually trying to predict that macroeconomic environment and making predictions on an index basis rather than a compilation of predictions based on individual asset prices. So it's a different way of making predictions. There are many different avenues where people can now engage and make money out of participating in those markets. I think the opportunities that CloseCross will allow people to do similar things in terms of they will be able to go in and make predictions on individual assets, but also on a complete index basis or even on a more macro level in terms of interest rates, for example, right?
Yeah. So to clarify, if you look at a bunch of traders, everyone's going short on the Dow Jones Industrial Average in the near future. Would that be construed as maybe an indicator of future economic instability? Would that be the prediction you can make?
You could, right? But of course, there is no guarantee that that's correct, right? It's like if you've seen, Who Wants to Be a Millionaire, right? Quite often the crowd will get it right, but there are instances where they will get it wrong, right? So yes, I mean, you can have a certain level of confidence in terms of going with the crowd. But there's always more money to be made in a contrarian trade as well. Don't forget, it's a financial market, right? It's not that you're trying to get an answer on a fact, like who was the author of this book or something like this, right? So, yes, you can use that to make predictions, but I would rather say that that is more for people to say, I would like to see the overall crowd wisdom that's out there. So the way we do it is, for example, if you can see my hand, right? So let's say any price of an asset is from 0 to infinity, right? And what you can do is you can say, okay, these are the 5 or 7 key brackets where essentially it will end up. So if you look statistically and mathematically, it's called what Six Sigma event, right? So 1 in a billion event, which is like the complete tail enders, right? But you will see a normal Z curve where the general population tends to be in the middle. That's the same thing that happens with the financial asset pricing, right? So at CloseCross, what we say is we're going to divide that up into price brackets, and all you have to do is saying, will it be here, 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 or wherever you think it's going to be. Now, if you were going to say, oh, it's going to be very volatile, I can't say up or down, but I know there are serious things happening on a macro and geopolitical situation, you can just pick the last two, right? So you're essentially, without having to create a volatility index on a certain asset, with our platform, you can just create it for yourself. Right? So you say, I think it's going to be either here or here, up or down, but it's going to be extremely volatile. If you say it's a very boring month, nothing's going to happen, it's just going to stay here, right? It's going to be range bound, essentially. So you can make it easier for the people to get into these markets by providing their inputs to this collective wisdom, but also make money out of it in an easier manner. Part of what we are doing at CloseCross is to simplify the entire process of entering those markets. So if you look at the financial derivatives market today, it's very, very complex, right? From two different perspectives. One, the financial jargon they use, and the mathematical variables you need to be aware of, right? So if you understand delta, vega, and rho, and you can convert that into an Excel sheet, you can then calculate your return on investment. Now it's too much for even an educated person who has an idea where the market is going. I don't need to understand the nitty-gritty of all those contract terms to know where the market is going. So we simplify that, right? All you need to do is select an asset, pick a price bracket, as I was saying, and put whatever amount you want on it. The other thing is the entire value chain is very, very long. So in a financial derivative space, you need a bank account, a trading account, or a deposit account. You need access to the brokerage house. Then you get to the derivative issuers who are going to have their price premiums and spreads. Now, if you are an occasional trader and you have to maintain that entire long value chain, it becomes very expensive. Right? So just to make profit, you will need to put in a lot of money into it. Otherwise, you won't even cover the costs you're outlaying for maintaining that value chain. So in our platform, you don't need to have any of those things, right? You download the application, you create an account, and off you go, right? None of these long value chain. So the other thing which needs to be catered to is to remove those barriers to entry for the market. It's a $1,200 trillion a year market in notional value, right? The financial derivatives. It's 10 times the global GDP because it's notional value, not exchange value. But it's only accessed by 2% of the people. And so we went about analyzing, saying, why is that the case? Because everybody has an opinion. Everybody predicts in life, right? As a human being, all you do is predict. Doesn't matter what, not just financial assets, but what's going to happen in this relationship, or what would I like to have tomorrow night for dinner, or things like this. Everything you do is predictions based, right? So let's make it easier for the people to at least enter the financial markets in an easier manner. So we've removed that complexity of understanding and the entire value chain, right? So now we can have more financial inclusion than the 2% who can actually access the market today because of that key barrier to entry.
And if you were trying to make predictions based on some kind of crowd wisdom here, casting a wider net of many more people, rather than just this 2%, would that give you better predictions on the whole, do you think?
Absolutely, right? I mean, financial traders will have their own biases, whereas the consumers of this world who are not participating in there, they have a different understanding of the world, right? The people who actually bought the first iPod knew that Apple was going to be great before the financial analysts knew. Financial analysts were observing the consumers saying, oh, they sold these many iPods. I think there's a trajectory here we can develop. You see the difference? So there is a way to capture a lot more information from the markets out there, but it's also a lot more about letting these people express themselves and getting them to participate in these markets in an easier to understand manner, with no fixed costs, for example, right? That's the other thing, the cost of maintaining this value chain. Let's take it out. So even if you are going to enter into 2 trades in a year, now you can, because you have zero cost, right? There is no account maintenance fees and this and that and everything else. You can go in, you can look at how the markets are doing. When you're ready, you participate, and then you're done.
So what's the secret sauce that lets you remove this entire value chain from the equation? What does CloseCross do differently?
Right, so a couple of enabling technologies, of course, help, but let's not talk about the technology piece. Let's focus on what we are doing for the end users in the market, right? So I wrote the paper first in 2007 about financial decentralization. And what I saw was that to replicate the entire financial derivatives market, there are two things that need to happen, right? Remember, this is a hub and spoke mechanism where the centralized issuers are issuing all the different derivative contracts to thousands of participants, and everybody settles to the same centralized party. We are talking about removing that entire value chain, so now it's people's only market. If you want to create a people's only market, you need to have what we call a multi-party settlement mechanism, right? So when you settle a contract today, it's between two parties, right? So every contract written until now is bilateral. But when you talk about multilateral direct settlement without a centralized party involved, you need a multi-party settlement mechanism. So I set about writing that. We now hold a patent on that multi-party settlement mechanism, which got approved in 2011. So we've been working on it for a very long time.
Wow.
Because if you want to create true financial decentralization, it has to go beyond the infrastructure decentralization, right? We're talking about the economic role decentralization here. So when you do that, there has to be a direct settlement mechanism between thousands and millions of participants. So that's the first thing we got. The other secret sauce is, remember the efficient market dynamics. Now this sounds very academic, but it's very important, right? So tell me if I'm going into too much detail here. So when you trade an asset, right, a stock, for example, there is continuous buy and sell orders coming in. So it's perfectly efficient market dynamics. The price discovery is very efficient. When you talk about the financial derivatives market, it's the centralized parties, right? Pick a big name you want. They will essentially say they are the ones who are putting in this efficient market dynamics because they are the ones selling the contracts. So what happens is, let's say, continuing with the Dow Jones in a month example, the large company starts to sell some contracts. Now they see suddenly a lot more people are buying either on the upside or the downside. What they'll need to do is they'll need to absorb that crowd wisdom and sell the contract on the other side to balance their risk exposure.
Right.
Right?
Yeah.
So that is a pseudo-efficient market dynamics which they tend to create. And the way they do it is by using normal Black-Scholes models, time value of money, applying their knowledge and wisdom, and then pricing the contracts. So now we need to get to that efficient market dynamic in a market that is completely with people to people. So that poses a new challenge. So for that, what we wrote is the algorithm that is called the knowledge value of time algorithm. So if you take the Black-Scholes model of time value of money, and then you can automate the knowledge quantification layer on top of that, now you've got the knowledge value of time. And that can be a single variable that accounts for the risk reward between millions of participants in the same market. So we've got the multi-party settlement mechanism, we've got the knowledge value of time algorithms. You put this together, that is the secret sauce of how CloseCross will enable completely people's only market.
So would you be able to simplify this algorithm and how it works, what makes it so fantastic?
Right. So the risk reward essentially means, did you get enough reward compared to the risk you took, right? And it should be completely transparent to all the different participants. Let's take a general example. So in this prediction of Dow Jones in a month's time, if you were to make the prediction on the first of the month, normally you had higher risk.
Yeah.
If I came 15 days later, I had 15 days time to absorb all the news that was coming out, the earnings reports coming out, the jobless reports coming out, the factory outputs, GDP numbers. I have a lot more information coming out. I had the benefit of that, so my risk is reduced because I have a much better knowledge base, hence the knowledge value of time. Now, also in this 15 days, the crowd wisdom has been evolving because you, the first participants, are actually creating that crowd wisdom. So I can look at those price brackets and say, oh, collectively, a lot more people are saying it's going to be up, and very few people are saying it's going to be down. And then I can look at the spread of money along it, because that's a second variable, right? And then I can use that as an additional set of information. Now, I've had 15 more days of observing that, because we at CloseCross will provide this to the people for free, right? Until now, it's not available. Because of this additional information and the crowd wisdom, my risk is much lower, right? And so my reward should be lower. So in this scenario, even if we both would have put the same amount of money on the same outcome and we were both right, you would have a much higher return on investment because you had a much higher risk when you made that prediction. Right? And the equation which governs that is coming out of the knowledge value of time. So the people will not have to understand everything that I'm saying. Essentially, the earlier you get in, the higher your return will be based on the risk that we are capturing, based on this simple information flow rate, right? And what we call that is the beta, right? Which is the risk which is in the outcome process. And this is a culmination of all the different things, which is easily said to the people, right? So when you come in, the beta might be 10, and if I come in, it might be 5, which means that the relative risk you had was twice as much. So the relative return you will have is twice as much as me.
Yeah.
So if I would have returned $300 for my $10 input, you would have received $600 for your input of $10.
So if I'm understanding this correctly, we're essentially using crowd wisdom as a proxy for a much more expansive set of indicators that were typically used.
Yeah, and simplifying the entire risk management layers, which the current giants of this world are using, which is delivering zero efficiency to the people, right? If we can now, with this multi-party settlement and the knowledge value of time, create people's only market, how much efficiency are we creating for the people?
Yeah.
They don't need to have the entire value chain. They go in, they engage in a market that is only between the people. They can observe all the crowd wisdom for free, which was completely biased in the favor of the centralized parties until now. And they can make an amazing return without having to take on any leverage. Now, that's something we haven't spoken about, because this is really the defining characteristic for the need of today, as well as what CloseCross is providing. Everybody's heard about leverage, I'm guessing, right? But in essence, essentially, it means that I can put down $10 but trade worth $1,000 if I have 100x leverage. Yeah. Now, it's great because it sounds very good, but it can also be very risky. And you often end up in unquantifiable risks in some product formats, right? Mm-hmm. Or you might end up losing all your capital K of input within 5 minutes because it just made 1% dip on the other side and they covered all the margin, so it's gone, right? So all these unquantified risks need to be eliminated. So at CloseCross, what we're saying is there is no need for leverage because it's not one-to-one. When it is always one-to-one, if I want to make more money out of you, I have to take on a higher risk. There is no other way. And that is essentially the leverage, right? If I want to make 100x more return from you, I have to take 100x leverage. And it's the other way around. Your risk is my reward, and my risk is your reward, right?
Yeah.
So if there's only two parties in a contract, leverage is the only way to increase that. But what we're saying is we're moving the risk curve to the right by changing the number of people on the other end, right? In a people's only market, when we can do the multi-party settlement, now you can have multiple parties on the other side, which means without leverage, you can make an amazing amount of return. So if you go back to this mechanism, the price brackets, right? If we have 1,000 people, hundreds of people on the different price brackets, right? And one of them will be correct because these price brackets are the options which people are getting into, right?
Yep.
Now, if this one was correct and the rest were wrong, what we do is a zero-sum redistribution. So all the other 4 price brackets, all the money that was on it will go to the people who are in the correct price bracket, right?
Yeah.
So what it means is essentially, it depends on how much money is there and how much people are there on the other side. You don't know the counterparties until the outcome or the maturity time. So in this case of Dow Jones in a month, only at the end of the month will we know which one was the correct price brackets and who your counterparties are, right?
Yeah.
So the trade-off at CloseCross is saying you don't know how much you will make when you enter the market, but you might end up making a lot more based on how many people got it wrong. So that's the trade-off you need to make.
Yeah.
If you need to know absolutely for sure how much I make, you go into a one-to-one relationship and you lever up. But if you are in the position to say, I want to be right and I want to see how much I can make at the end of the day, I don't need to know how much I get up front, then that becomes a much better way for us to do. Because we are going back to the purest way of defining this prediction market by saying it needs to be a people's only market, take out all the biases of the centralized parties, and we need to ring fence it to the specific asset and the maturity times we talk about, right?
Yeah.
So there is no exposure of the risk along the different assets or along different timelines, which is what occurs today, which really manipulates the entire system. Now what we can do is, if you are in that group of people who are predicting Dow Jones in a month, that is ring-fenced and you are not interfered by anybody else, and your return is only dependent on how many people you were smarter against, right? And your relative return rate, as we discussed before.
Yeah, makes sense.
Okay.
So there are different tiers you did explain.
Yep.
Will these be the same number of tiers, similar types of tiers for each of these separate ring-fenced markets?
Yes, similar. So it comes out of the mathematical models, right? So let's talk about GBP, USD, for example, right? Okay. When you talk about foreign exchange markets, the ranges are very tight. Because on a day-to-day basis, you normally see about 0.5%, maximum 1% if it was a big news day, right? So those will be very tight. those price brackets if you wish.
Yeah.
But if you're talking about an asset like Bitcoin, which has an inherently higher volatility, these brackets will be larger spread out. Because on a daily average, it moves about 3%, let's say it like this. Right?
Yeah.
So it really
Yeah.
depends on which asset and which time horizon we talk about that will define the 0 to infinity breakdown of the different price brackets. Normally, we would break it down not more than 7 price brackets, ideally 5, because the first and the bottommost are the complete volatility ones,
Yeah,
and then you have your calls and puts and the range-bound options.
Okay, that makes sense. You don't really need multiple brackets at either end, so 5 to 7,
Yeah.
good number.
Yeah.
Would you be more granular for certain markets and more number of brackets if you do think people have information to make more accurate calls?
We might,
Yeah.
but we'll want to see first how the user feedback and how it works out. Essentially, because it's 0 to infinity, we can have whatever we want, right?
Yeah.
But the more specific you get, the more speculative it gets. Don't forget, right? So if you are buying a call or a put option right now, it's rather wide range where you can make money out of it. So we also don't want them to say, it's not a gambling format, for example, where you say closest to this thing is the right one and you get everything, right? It's not like predicting 6 numbers in a lotto, for example.
Yeah.
So you can't make it too granular as well. We'll look at it, what the market feedback is, and in specific cases if we need to do it. But normally 5 to 7 brackets mathematically works out very well. Because as I was explaining, if you're looking at a 6 sigma event, which is a standard deviation, 3 standard deviations is more than enough. So 7 price brackets is enough.
Yeah. So if CloseCross does become widely accepted as a new de facto for another 98% and the 2% of traders, will that change market behavior as a whole? Will it change how markets work?
Absolutely. Because the power will be with the people, and they will not need any centralized parties to carry out the trades or the, let's say, the prediction market movements that they want to execute, right? And the idea is also to say we need to make the people very secure, because that is the way to take away the market from the existing players and to bring out a complete white space, new demographic. What do I mean by that is we will be a fully regulated platform. Right? We're going through the process right now. The idea is to say we need to differentiate and make sure that people are easily coming into the platform because of all the things we've created, but they also feel safe and secure.
Yeah.
What happens in some of, by now, the old school markets like Augur and Gnosis, for example, what you see is they will have a library of the different smart contracts. Now, you as a market participant can go and create a prediction market using that smart contract library. You will have to put up a collateral. Then you go and look for market participants who will take the opposite side. It's very complicated.
Yeah.
But don't forget, the key differentiation is they're saying we don't have to be regulated because we only provide smart contracts. We are the technology providers. But the users who are using this platform in some jurisdictions can get into real trouble because they're creating a financial market or a predictions market without being licensed or regulated to do so. Now, nobody has cared about it because it hasn't grown very much. But that is a big, big factor.
Yeah.
The users are not aware that sometimes by setting up that market, they might be doing something which they should be regulated for, or at least in the eyes of the regulators, right? So we are saying we are going to take all that away. We are creating a predictions platform which is only for the financial assets, and we will carry out the regulation burden, so to say, so that the users are completely safe and secure, right? So which is why we think it's a much valid alternative to the existing prediction markets as well as the financial derivatives part.
Yeah. I guess one of the overarching questions under this is how much is any given market or asset innately worth, and what if people get it wrong?
Well, there will be people who will get it right, and there will be people who get it wrong. The beauty of what we do is at least it will be between the people and nobody else is benefiting. Right?
Yeah.
Which is the purest way of looking at it. So there is no centralized party that is going to win or lose big time. Remember, why Lehman Brothers collapsed was because they took the bets on the wrong side on a highly leveraged position which they couldn't cover. Right? The same thing can happen with the people as well when they are going against centralized parties, and they might go into that status. We don't want that to happen. It's directly between the people. You can never lose more than you put in, but you might have access to amazing returns without leverage. So we want to bring it down to the people. It's power back to the people. And so, yes, I think this should help us to create a much wider market and a much better financial inclusion.
Yeah. Absolutely does sound like it. The question being, I guess, as a regulated financial platform, you're going to be in a much better position, I think, to pick up new users. And a much simpler platform as well compared to the, by now, old school ones, as you said. Do you think all this compliance overhead and etc. will affect the nature of the product you're trying to deliver? Will it affect market behavior, I guess, I'm asking?
So yes, if you are trying to stay away completely from KYC AML, then you will not be able to use CloseCross. That's clear. And I understand why some people prefer that as a much better way of engaging with the blockchain and crypto space. So yes, that would not be for them. But for the regular Joe who does not need to worry too much about somebody knowing who they are when they're entering the financial market, this should be fine. Right, which is how 98% of the markets work today. When you go to a financial institute or your bank, they already know who you are and what you're trading. And this is very important because it is also our responsibility as a platform to say that our platform is not getting misused for money laundering or terrorist financing.
Yeah.
So it is important that we also give people a safe environment when they're coming in. So yes, that will be required.
You think there could be a new attack vector of sorts by trying to manipulate user behavior in your markets to manipulate the wider markets?
So you can't. So what we are is we are feeding off the financial asset pricing, the trading which is occurring elsewhere, right? If you think about us as a non-deliverable forward, we are only picking up that asset price and feeding the prediction market platforms on our side. So even if you are entering this prediction market and putting a lot of money on one side or the other one, you are only creating more liquidity in that people's market. Right?
Yeah.
You cannot influence the price of the asset because that is traded completely elsewhere. These are non-deliverable forwards. So it's not like if people are getting into these contracts, I need to go and buy this amount of Bitcoin to deliver them in the future, which is why more engagement here means higher pricing there. This, what we're doing, is a completely non-skewed way of creating a people's-only market, predictions market. Right? So if you wanted to skew the price of the asset, they will need to go to the exchange or exchanges where these assets are traded and put in a lot of money to do that, but it will not probably pay off, right?
Yeah.
Because that is a very large market, I say. And the
Presumably-
other thing is we will not be putting predictions markets on less traded assets, if you wish, right? So the low volume assets. So if we were to do a crypto market, for example, it would be limited to Bitcoin and Ether, for example. So it's very difficult to go and even manipulate on the exchange. We
Yeah.
wouldn't be doing the long tail of altcoins, if you wish, because there the chances are higher that you might make more return by manipulating the outcome of the price on an exchange. So we're not going to do that. And if you're talking about indexes, traditional indexes, that is almost impossible because you're talking about billions of dollars to manipulate that for an outcome here. Unless we get to that level of magnitude, I don't think that's a risk.
No, the user behavior is a new market indicator of sorts. If everyone sees everyone skewing a certain way on the CloseCross platform, the markets may respond to that, theoretically.
Yes, and that's their choice, right? Because the crowd wisdom which everybody is creating should be available to everybody, and people will absorb it in different ways. Now, don't forget, there are different types of people in the world. One that will say, I'll rather go with the crowd and make lesser return. But there will be others who will say, I'll make a contrarian trade because I'm getting a much higher bang for buck here, and if I do get it right, then I'm going to make a lot of return. Right? And in between those two extremes are a lot more other people who will have their different ways of trading. As I was explaining before, you don't need to pick one price bracket. You can say, I'm saying it's going to be volatile, right? So there'll be people who will do that. And there might be people who will say, I will enter the market on the first of the month because I think that's the most likely version. I'm going to put a little bit money here because that I think is right. Come back 15 days later and see now the crowd wisdom looks different and I might hedge against my own prediction or I might put double up.
Yeah.
Right? So the different ways people will find to engage with CloseCross platform. There will be different trading strategies which they will develop and evolve much more than actually we've thought about, right? What we give the people is an easy interface, easy to understand product, but what you can actually do with that is many, many smarter things. So we will also be putting out tutorial videos for different kinds of trades that you can make, because even if it's a 3-click process, you can still make very smart trades based on this. Because there is, for example, no volatility index on Ether today, right? Or Bitcoin.
Yeah.
And now they can make their own by just engaging like that. So yes, we will help also users to understand how they can make the best of what we are providing them.
So a whole new world of finance, essentially.
Absolutely. This is what we say, right? I mean, it's not just a marginal innovation. It's really a ground-up parallel universe, if you wish, to the existing derivatives and the markets, because the way it works is different, the way people will engage is different, and the way people will make money is different. It's all very easy to understand. There is no unquantified risk. There are no fixed costs, right? And in doing all that, we believe that we are also much more aligned to the new age trader demographic. They have a different
Yeah.
value system, right? If you look at the value system of the new age trader, which is what we need to cater to as an industry, is saying most of them are, I don't want to deal with too large to fail centralized parties, right? I don't want to be in the hands of a centralized party when I enter the markets, because guess what? In 20 years, I'm moving towards the status of being completely self-sovereign.
Yeah.
Yeah. I don't want to be responsible for covering other people's costs. If you look at all these different changes in how people are thinking, we are much better positioned to cater to this changing value system and the new age trader. And if you look at the old school markets, they will probably realize it too late.
What if they don't? How would the old school markets enter the space? Would they become players on the CloseCross platform, do you think?
Well, I think they are victims of what they've built, so they can't change, right? So we have spoken to some of these large institutes, and they are very intrigued by what we're doing. They are very interested in saying, the good thing we have is the protections we've got through the patents in place, as well as the secret sauce of the knowledge value of time. But even if they would have access to that, they just can't do it because it would cannibalize the way they make money right now. And don't forget, I mean, what we are proposing is a challenger version. Yeah, we are yet to make any inroads or scratch the surface. They are sitting on top of a 1,200 trillion market, so they have no reason to do it right now. And which is why I said that by the time they realize it, it will be too late, because it's not about the amount of money that will be traded, the amount of people that will have shifted to demand different things than what they're providing today.
Yeah.
Right? And by that, it's too late. That's what I meant by that shift over.
That makes sense. So you did mention you've been speaking to these institutions. What else is happening inside CloseCross? Where's the development at? How's things going?
Oh, it's going great. So we are a team of 17 people by now. So still very early days. We've been well funded by U.S. venture funds. So we haven't done, an ICO and the sort. We're not planning to do that. On our platform, they'll only use stable coins, for example, because you can have a volatile asset for volatile predictions. The development of the platform has been completed. We put out the testnet already last November. So if you are on iOS or Google, you can go and download that. There's also Medium blog post. If you go on medium.com/closecross, you can see a whole post on how to actually download it, become our beta tester if you wish, provide us some feedback. We are also going through a complete refresh based on the 8 months of feedback which we've collected until now. And if they want to provide more feedback, they can join our Telegram group and sorts as well. But so we've put out the testnet. In 140 countries, you can download and use it. Send us the feedback, please. We are now going through the regulatory licensing process. And as part of that, of course, we are beefing up our security layers on top of that MVP testnet, if you wish, so that we are ready for the market launch, which we still hope will be before the end of this year. But of course, we can't make predictions on regulatory aspects of these things. So yeah, I mean, we started early. 2007, the paper was written. 2008, patent was filed. 2011, we got it. We've built the platform. We've got a team. We've started the regulatory process. So the last piece now is to actually hit the market and convey to the people the best way we can that this is giving them the power, and that's why they should look at us in a much favorable light than any other options available to them today.
Yeah. Well, but sounds like it's been a long road.
Yes, but a well thought out and well prepared for, right? There is, of course, impatience can be a virtue, but sometimes it's better to be ready when the market is ready for you, right?
Yeah.
Just to give an example, 1999 is when I launched my first digital currency. Not crypto, digital currency, right? Now, we got the Golden Mouse Award, which were big at that time. We got some critical acclaim, but it died because there was no demand for it. So this time we've said we're going to take it slowly because we want to wait till the market is ready. There is no point bringing it out when we are ready, because if there is nobody who understands. I mean, in 2007, you couldn't talk about democratization or decentralization, right? Or smart contracts. So it's better that we waited until this came about and then did that.
You think the market's ready?
I think at least there is a critical mass of the users who will be our first platform participants, right? And yeah, I think it's ready and it's picking up pace.
Yeah. Well, if you want to be among them, CloseCross testnet up and running, I guess.
Absolutely, yes. Please do join the testnet environment. Like I said, there's a blog post explaining you how you can engage with us. And if you can, that will, of course, give us much needed feedback so we can only make the platform better for you.
Exciting. Thank you very much for joining us.
Thank you very much, Andrew.